Hello everyone, this is Sia Anshubudia and let's discuss the tax amendments that have taken place for your ACCA UK F6 exams for the exam attempts June 2024 till March 2025. I've summarized all the changes at one place, so let's discuss them quickly, one by one, and wherever there is a need to understand with the help of examples in detail, we will do that. So I'll just share the screen, and then we go and understand those changes one by one. So here is the summary list. Before I proceed, people, all of you, those who may be requiring the summary list with you, please message or type it in the comment box, your email IDs, and I will share the PDF version of this on your emails. Okay, so let's understand them. First change that have taken place in your taxes syllabus is the changes in the slab rates which are applicable to the individuals. So what are those changes? Let's understand. The basic rate band slab rate is same, that is from the nil income till 37,700 pounds. The tax rate would be 20%. And yes, it is the basic rate band. And we call this taxpayer a basic rate taxpayer. The second rate band is now from 37,701 pounds till 125,140 pounds. This is the change that has taken place. And the slab rate and the tax rate applicable for this slab is 40%. And we call this band as higher rate band. The taxpayer is higher rate taxpayer. Then the last slab is 125,140 onwards. Okay, and the tax rate is 45%. And the taxpayer is additional rate taxpayer. So precisely the tax rates have not changed, just that the high rate band has changed. Move on to the next one. There is a change in the dividend nil rate band as well as the dividend tax rates. Let's look at that. The dividend income starting nil rate band or the nil rate band, which was earlier 2,000 pounds, now it has been reduced to 1,000 pounds to all the taxpayers. That means if a taxpayer has got a dividend income of 5,000, then first 1,000 would be at 0% tax rate. The next, beyond 1,000, the dividend income will be taxed based upon the availability of the basic rate band or the high rate band and onwards. So there is still some basic rate band remaining, which can adjust the dividend income. Then for that basic rate band, the dividend income tax would be 8.75%. For the higher rate band, that is now the basic rate band is over. We have crossed 37,700 of the overall taxable income, and we still have some dividend income remaining. Then in that case, till it is reaching the higher rate band, the tax rate would be 33.75%. Beyond higher rate band, that is when it is in the additional rate band, the tax rate would be 39.35%. Clear? Everybody? Yes, so you're going to apply now these two revised slab rates and the tax rates for all the questions that you're going to practice for your June attempt onwards. Okay, another small change, the official rate of interest. Now, wherever we are using, whether we are using it to calculate the beneficial loan interest benefit, or you use it to calculate the living accommodation benefit, everywhere you're going to use the official rate of interest as 2.25%. Yes, it is going to be given to you in your tax rates and allowances chart. So you actually don't need to learn the official rate of interest or the nil rate bands, tax rates, as well as the slab rates. But yes, you need to practice with these rates so that you are not mixing up the old rates and the new rates in the exam. Moving on, yes, then just like we have income tax slab rates changes, we have changes in the NIC slab rates as well. So I will just discuss them one by one. NIC class 1 employees contribution, which is applicable, in slab rates. First slab is from the gross earnings between 12,570 till 50,270 pounds. The NIC rate is 12% of the cash or the gross earnings that we call it. Beyond 50,270, the percentage would be 2%. NIC Class 1 employer's contribution for the gross earnings beyond 9,100 pounds is 13.8%. NIC Class 1A on the taxable benefits, that is your non-cash benefits, it is 13.8% of the taxable benefits. NIC Class 2 contributions has also changed. Now it is 3.45 pounds per week. So for a year, it will be 179 per year. Class 4 NIC, again the slabs, it is charged slab wise. So for the slab or for the profits falling between 12,570 till 50,270, the NIC rates are 9%. Beyond 50,270, the NIC rates are 2%. I hope everybody is absolutely clear with this, with no questions and queries. If there is, then please type them in the chat box. Or please type them in the comment section. I will take them according. Let's just have a look at the NIC chapter. Yes, people. So all the rates would be given to you in your tax rates and allowances chart. But again, you should be aware of how to use the rates. Next bigger change is now in the capital allowances for companies. Till or prior to 1st April 2023, or if I say for a precisely 2-year period, from 1st April 21 till 31st March 23, companies enjoyed enhanced capital allowances, or we would call them super deductions, that was applicable or available on the purchase of new plant and machinery, which was only available to the corporations, and it was available on the purchase of new plant and machinery, not second hand, as well as it was not available in cars. The enhanced capital allowances that were available were at the rate of 130% of the cost of plant and machinery if it was a main pool plant and machinery. If it was a special rate pool plant and machinery, the percentage was 50%, first year allowance. Correct? Now there are changes because now no longer these enhanced allowances are applicable. This means in your exam, you will not find a single question that give you a scenario where the company has bought new plant and machinery in the tax year starting 1st April 23 onwards, or in the period starting 1st April 23 onwards. So you will not have any questions based on them. But what you will find questions would be on the disposals. That is, earlier the companies claimed those enhanced capital allowances, and now those assets are getting disposed of. So that plant and machinery is getting disposed of. So how to treat those cases, how to treat those disposals is the checking point or a very important examination point applicable for all of you attempting June 24 onwards. Let's first understand what is the changes, and then I'm going to do a question to make you understand how we are going to apply these changes. Okay? So I just summarized it over here. You will not see a purchase of such an asset in your exam, as I've told you. However, you may see a disposal of an asset on which a super deduction is already being claimed. If a 130% allowance has been claimed on the full cost of the asset, there will be a balancing charge equal to the lower of disposal proceeds and cost. That means if you have already claimed 130% super deduction in the previous years, then we would do a normal calculation of lower of disposal proceeds or cost. Suppose one of the figure is not given, then suppose if cost is not given, then disposal proceeds will be equal to balancing charge. If disposal proceeds would always be given though. So what if both the figures are given, we'll take lower of the two. Normally also you will say, ma'am, we always do the same thing whenever an asset is disposed of. We always reduce from the main pool or the special rate pool, the lower of disposal proceeds or cost. Exactly, you have to do the same calculation, but the treatment or the presentation is not same. We are not going to reduce this figure from main pool or special rate pool. Right now, I'm focusing on main pool for 130% criteria. So we are not going to reduce it from the main pool. Instead, we will present it as a balancing charge and we will reduce the capital allowances by it. Because I'm sure you all are aware that balancing charge reduces the allowances available. Got it? Now, when you go to special rate pool, so you would say, ma'am, we never took 130% or 100% over there. What we took was 50% first year allowance. Then also, will we reduce the entire amount? No. Now what you would do, you would take lower of disposal proceeds and cost. You will take that amount. Suppose that amount is 50,000. Okay. Now 50,000, 50% will be balancing charge. Why? Because at the time of purchase of that machinery in special rate pool, we took 50% as first year allowance. And the remaining 50% would be reduced from the special rate pool like normally we do a treatment for disposal of assets. I know it seems a bit confusing, so let's quickly take a question and understand the same. So I would quickly just take a simple example to make you understand the same. Let me just take out one question. So let's discuss this illustration and be very clear about it. The applicability of these changes. During the year ended 31st March 24, Baird Limited bought second-hand factory equipment for 155,000. This information is given to calculate AIA, right? And sold the following items for proceeds less than the cost. It clearly says that the proceeds are less than the cost. So even if cost is not given, we know we have to take the proceeds amount as the balancing charge. On 1st June 23, there is a machinery on which earlier we have claimed 130% super deduction and the proceed value is 30,000. The next sale or disposal is of a special rate expenditure, which is a part of your special rate pool, on which earlier we have claimed 50% first year allowance on the full cost. And the proceeds were 70,000. The TWDV balance brought forward or the opening balance on 1st April 23 was 100,000 and the special rate pool was 50,000. What are the maximum capital allowances which are available for the tax year ended, for the year ended 31st March 24? Let's do the calculations, people here. Okay, so first we will make the columns that we need. First column is always AIA, FIA column. Then we have main pool. Then we have special rate pool. And then we have allowances. Okay. And we will insert the pound figure. Done. Right. Now let's start. So first we have TWDV opening. So I'll write here TWDV brought forward. Okay, it is given here. It is 100,000 and 50,000. So let's write here 100,000 and 50,000. Now the next there is an AIA. So I will write here additions. You know, we always give this heading additions qualifying for AIA. Underline it. Just write the name. It is second-hand factory equipment. So factory equipment. What is the value? It is 155,000. We have full AIE available. So we will write here AIE. Nothing will go to the main pool because full AIE is available here. In the allowances, I will add AIE. Got it? So it's an allowance that we are getting. Nothing will go to the main pool. Now next, let's take the next. Now, do we have any other additions? No. Just that we have disposal. So here I'll write disposal. First disposal is of machinery. Machinery. I will write here 130% claimed earlier. Okay, so that the examiner will know that yes, I know about this fact. Now, so 130% has been claimed earlier. The proceeds is 30,000. Okay, and it is we take lower of proceeds or cost. The question here clearly mentions that proceeds are less than the cost. So I don't need the cost figure. I just need the proceeds, which is already with me, 30,000. Now we have already claimed 130% of it earlier, the entire cost. So as per the revised rules or the disposal rules for these enhanced expenditures which were claimed earlier, we will take the entire amount of this lower of disposal proceeds or cost as a balancing charge. Balancing charge always reduces the allowances. So I will write here less 30 because it is going to reduce the allowances. Okay, the next is disposal proceeds and so special rate expenditure. On this, we have claimed 50%. We have not claimed full amount. So 50%. 50% claimed early. Okay, now 70,000 is the proceeds. We have already claimed 50% earlier. So now how are you going to treat this disposal? You'll break it in two parts, 50% and 50%. First 50% would be treated as a balancing charge. Okay, so that you can correlate between the 50% that you have claimed first year allowance earlier, and now you can see that you are treating the same as balancing charge, lower of disposal proceeds or cost. So that amount is 70,000. Now 70,000, 50% is 35,000. 35,000 will come here. I'll take 70,000 multiplied by 50%. And the balance 35,000 will be treated normally as a disposal from the special rate pool. So I will take the balance here 35,000. I hope I'm clear absolutely on this. Now, do we have any other transaction? No, we don't have. Since we don't have any other transaction, so now we are going to balance the pool. Okay, now we are going to check the totals. Okay, we've got the changes. Actually, we don't need the total here. Now we have got the changes. Now we will write WDA. WDA is at the rate of 18% oblique 6%. Same rates are up. Let's take the total of allowances here. Okay. Now we get the totals and right here TWDV carried. Okay, people. Okay, and capital allowances. So we get the total of capital allowances that are available to the individual to be adjusted against the trading profits. Is available to the companies to be adjusted against the taxable trading profits of the company would be 1,08,900. I hope I'm absolutely clear on it. If there is any questions and queries, put it in the comment section. Okay, now let's move on to the next change. Next change is a very welcome change by the students because it is going to make your life much, much easier. So I know when we, in the past, when we've discussed about those opening year, closing year rules as a part of the basis year rules while discussing the trading profits, it was always a little bit of pain for the students. So now that has been removed from the syllabus and in fact from the taxes only. What it means, I'll tell you. So until the tax year 22-23, the old basis period rules were used to calculate the profits taxed in a particular tax year. I'm sure many of you must be aware of the same. The rules, which were known as current year basis period rules, tax the profits of the 12 months accounting period, which we also call as CYB rules, and we applied, those opening years and the closing year special rules, also terminal year rules. So they are ending in the particular tax year, right? We always used to tax it. We used to take a CYB basis for the accounting year, which is ending in a particular tax year. We would tax it in that tax. So there would always be differences between the accounting date and the tax year dates, and we would have the concept of overlap profits and so on. Now there is no need for the same because that concept has been removed from tax. So what is the new concept? The new concept is much easier. In fact, it's a very welcome change because it is going to make the life of all much easier. For your syllabus, we're not taking very, very difficult or very, confusing cases. It is going to be a very straightforward case. But let's understand those changes. So now from the tax year 24-25 onwards, it is also applicable for your tax year 23-24 questions. The new tax year basis rules will apply, meaning that there are no tax advantages when it comes to the choice of accounting date. It means you can, in your exam, you will not find any accounting dates which is actually not coinciding with your tax years. It is going to be very, very straightforward questions given to you in the exam. Let me just cover it first. So under the tax year basis, the profits arising in the tax year are taxed. Simple. So just like we had employment income, earning, whatever is arising in the tax year is taxed. Likewise here, whatever profits are arising in the tax year are going to be taxed. Very easy. It is going to make your life. So now if a business does not have a 5th April or a 31st March year end, the tax adjusted profits will need to be apportioned for that particular tax year. For example, an accounting date of 5th April or 31st March, as 31st March is for calculation purposes, we treat it till 31st March as 5th April. It is the most straightforward option because there is no need to apportion the profit. Okay, let's do one thing. Let's quickly take a small question to understand this. Let's take an example. Okay, let's take a quick example on it. Angelo prepares accounts 31st December each year. In the year ended 31st December 24, his TATP, or tax adjusted profits, are 10,000. And in the year ended 31st December 25, his tax adjusted profits are 12,000. What profits will be taxed in 24-25? Now you know that the tax year 24-25, so the tax year will start on 6 April 2024 to 5th April 2025. And you know that we always take it in the round of months. Okay, so now if I break it, because if you see here, the first year is ending on 31st December 24, and after that, the new year is starting. So as per the new tax year rules, what we will do, we will break this period into two periods. Because first period would be First period would be from 6th April 2024 till 31st December 2024. And the next would be from 1st January 2025 till 5th April 2025. Okay. Now, why are we doing it? I hope I'm clear, because this year is not coinciding with the tax year. And now the new rule says we are only going to tax profits for the tax year. So I need to take profits for this tax year. So I will pro rata portion it. Now, the whole year profit is 10,000. And this is how period is how many months? April to December, 9 months. And this period is for 3 months. So what will be the profit? 10,000 is for 12 months. So for 9 months would be 7,500. 12,000 is the profits for 3 months. So the next, sorry, my bad. 12,000 is the profit for 12 months. So how much is it for 3 months? 3,000. So the total profits that will be taxed for this tax year would be simple and straight 10,500. No need to apply any other difficult or special rules. Easy? I hope that you all are able to understand the concepts that I have discussed so far for the changes that have taken place. This is part 1 of the changes video. Part 2 I would also be uploading soon. Till that time, any questions and queries, please put up in the comment section. If you want a copy of these changes summary, please comment your email ID in the comment section and I would send the same. Additionally, guys, if you want me to discuss any particular chapter or topic of taxes in detail, please type that also in the comment section. So I'll prepare a video and I would upload it too soon. All the best, study well, study hard.